Hi, welcome everyone. I'm John Slazas from Dharma Capital Trading. Today we're going to go over decision matrix with our fact-based trading solutions. Providing a way to standardize and put some structure around your decisions. Taking a little higher level view, but kind of going top down from the macro structure to the micro structure, and really just getting your trading into more of a if-then process. If this is happening, then you do this. Before we get into it, I just want to go through a disclosure. Everything that we are going to go over today is all educational. Nothing that we say about buying or selling should take as a fact. We may be trading with that or against it. If you are trading, be sure you're using risk capital. And if you're not using risk capital, it's going to mess up your decision-making process, and you're not going to think clearly. Your emotions are going to take over. So it's a key factor in trading. You want to be calm, focused, and make clear decisions. And that's what we're all about. So I've been involved in the markets for over 35 years. My company, JS Services, we just transitioned that into JS Analytics with Dharma Capital Trading. We provide data-driven solutions, so fact-based solutions. We cater to both professional and aspiring traders. Any new trader is aspiring professional. If you're trading in the markets, it's a business. You're here to make money. And I started my business on the floor of the Mercantile Exchange in 1984. Literally handing out levels to buy and sell to traders in the pits on trading cards. And now we're covering futures, we cover equities, options, and crypto. And we've got traders that have been working with us for pretty much the duration of our time. We're a resource in your toolkit. And the goal with Dharma Capital Trading is to make a positive impact on traders to help them achieve their full potential. We're here to empower you with our fact-based solutions, and by doing this, we're going to help to enhance your awareness and your decision making. And ultimately what this does, it's going to improve your confidence, and it's going to help you get into a state of flow. And that's what it's all about. So I'm going to dive right into our fact-focused method and what we do and what I do every day. And we're going to take a look at our playbook. But basically, when we set down a foundation of the market, we need to know what the context of the session. What's the state? What's the underlying state? And that, not only the technical state, but also what's the news environment, the news narrative. That's big for crypto. We need to understand where the structure points are, where the states are going to change, and then what strategy themes do we want to get involved with. Which ones are dominating the market. And so, everyone's got their own method. Everyone does their own thing, and you should. It's all based on your own personality strengths, your traits, what you learned. But you need to find your own way. You need to find what works for you. What works for somebody else might not work for you. My style's changed throughout the years. I take more of a step back, but always just focusing on the facts, looking for the market to provide opportunity. So let's just break things down. So today, in my Discord channel, pull it up here. Basically posted an update this morning. This is an update that I do in our trade room. I posted an outlook the night before, and then we have this outlook is before the legacy markets get kicked into gear. posting that, and so identifying where the structure alignment is, focusing on what strategies are in play. And last night overnight, and I'm going to go through this in more detail, but this is just how we tee things up. What you're looking at here is this is a monthly structure chart, this is weekly structure, and this is the daily structure, and this is the daily playbook. And you can visit this on the Discord site. We're going to go through both Bitcoin and we're going to go through Ether today, basis the playbook, and we're going to take a look at where they are at now and how we would participate in these strategies. Crypto is starts out the session at 12 a.m. UTC time, so that's when things start to kick into gear, and it's 12 o'clock in Chicago, and the market's kind of through the day already, but we're going to go through and take a look at things. I really don't like to trade that much in the afternoon, as the market, especially for crypto, you have to really feel from around really 1 o'clock on, the market starts to go into what we call a settlement phase, and so things can get a little wily there. But we're going to go over what happened today, and I just want to point out that we've got this. We had this posted in our Discord channel, and we're talking about that Bitcoin was in a hedge theme, and that we were engaged with the sell UP reversal strategy was in play, and a sell DR breakout strategy is in play. And what's important about identifying these big themes is this is giving you the higher context. If we're only focused on the micro and we really dial in here to the microstructure, and we're just looking for who the players are, what's happening, where the money's coming in and out. I look at the Bookmap multi-exchange data, just to get a sense. But with crypto especially, liquidity is all over the place. And if you're just focused on one exchange, you need to understand that there's only so many players in there. There's a lot of OTC trading. A lot of bigger players they're trading OTC pretty much exclusively. They will put some resting orders on the exchange, but you have to remember they may get into a position or out of a position on an exchange and get out OTC. So that's something to always be aware of. I like to look at the flows that are coming in on the microstructure, but we'll get to that in a minute. So just going over from the top down, the main point here was just you can't get too caught up in the micro. You need to understand what the structure is, and by doing that, it's going to give you more insight to the microstructure, and it's going to have you be able to anticipate and have expectations. You're going to expect something to occur, and then when you see that happening in the microstructure, then it makes it easier to act. You're not thinking, you're just doing, you're acting, and that's the big thing. So the important thing is you set out and you engage in the market. Okay, you ready to start? All right. Well, now I need to get my foundation set. I need to get my benchmark. I need to get some clarity, and that's what it's all about: finding clarity. And so that's what the playbook is meant to do. It's meant to give you some clarity. It's give you this fact-based benchmark. There's no subjectivity here. This is all math. When I designed this algo, it was designed to tell me what the truth was. I just want to point me where the facts are, not design a system, but design a fact-finding truth. And so with our market grid, that each tile represents a different market, and the color coding is for what the different states are. And we're taking a look at Bitcoin, and typically market states are broken up into general type states, bull trend, bear trend, and neutral digestion. Those are the classic. If you ask someone, most traders, that's what they're going to kind of compartmentalize their trading. It's either trend or non-trend. Well, trends aren't always the same. Some trends accelerate. So a market that's in an accelerating trend is going to trade different than a market that's in just a general bear trend. And we've all traded those states. And that's all we're doing is just getting some clarity and recognition of, hey, this is the type of state that we're in. Ocean is in a bear trend, but Litecoin is in a bear trend acceleration. They're going to perform a little. Our expectations are different because what we're always doing is we're looking to align our expectations with facts. And so, if the market is in, for Bitcoin, the market's in a bull trend, is the market performing to the expectation of the state? That's basically it. If you don't understand what a bull trend is, or having different understandings of the nuances to a bull trend, because there's different parts to it, right? A bull, what's the definition of a positive trend? A market that's making higher move highs, higher move lows. Period. If it's not doing that, it's not performing like a bull trend. What happens in bull trends? Well, they don't go linear. To be aware of. Are we in a corrective part of that bull trend? Because we could have a negative down day in a bull trend that just goes linear down all day long. But the expectation is it's going to stabilize, and it may take all day, and then the market opens up the next period, and it starts to trend higher. So where are we within that? And then and if the market breaks structure out of a bull trend, what happens? Markets are constantly in transition from one state to the next. So where are those points of inflection that tell us that this structure or this state is broken, no longer true, and this market's in transition? We don't know what it's transitioning into, but we know it's transitioning. So we can't expect the market to perform to the expectation of the state. And that's the key thing. When you're in the microstructure, is the market performing to the expectation of the state? If it is, then things are easier to predict. If we're in a positive trend, looking for opportunities to get long is easy. The market's above the VWAP. What's happening in the order book? These are the things that they're much easier to jump onto when you have that that underlying fact foundation of what's the context. And so, with that context, we define the structure of it. So, as I mentioned, we understand that this market's in a bull trend, but where are the key inflection points that define that trend? And today in Bitcoin, this green line is what we call our sentiment bias, and this represents the literally the over/under number for any market, any time frame. Literally, if you're going to drawing one line on the chart, this is the balance point where the bias shifts from positive to negative. Period. So so this is for a bull trend. This is the inflection point that's going to tell us that this bull trend is no longer true. As long as we're above this point, the market's positive, and we're below it, there's a problem. And so that comes in today at 27,403. So we know that's the lower extreme for this bull trend. Then what's the upper peak? Where does this trend really start to accelerate and move higher? That's another key inflection point for a positive trend, that upper peak. And now these are quantitative numbers, so they're not going to necessarily match up with your price structure analysis. And so that's a key point to the work that we do. It's a little different. But that comes in today at 28,829. So we've defined that the kind of the big structure. So that's a pretty wide range. And you can consider the sentiment as kind of energy. This is the high value area because you've got the least amount of risk. If you're entering near this price point, you know that if you're entering here, you've got the least amount of risk for trading on either side of the market. And so this is where you spend your money. This is the big opportunities. This blue line, we call it the downside pivot. It's part of what we call our critical range. This is another good inflection point where this is the first breaking point of this positive trend. So if the positive trend is really going to keep going, it's going to hold this downside pivot, which is 28,014. And so then we take a look at, because we're in this specific state with this specific structure, these are the optimal things to do. If the market's performing the expectation, what do we want to do in a bull trend? And this is self-evident. We want to buy breaks above the R level, buy breaks above sentiment. That's the best that's the best thing to do. I call that a buy R fade. Fade momentum, fade negative momentum into this price point. into 27,403. This is where all the big buyers are, because this is where the contest of the state will shift and will be in a transitional state. What's another good thing to do? Well, let's let the market, sell off and fail from this downside pivot area. Try to make a play for this area. If it can't get down there and it pops back up above 28,014, let's get long then. So don't catch the falling knife on this corrective move. We know that where the real energy is. If you can't get there, fine, but now this will be a momentum level for us to tell us, hey, the positive trend is going to try to re-engage itself. And so these are the best things to do, because we're buying a break in an underlying positive trend. So what are some things that we can do on a hedge basis? What are some things that the market tells us through price action within structure that there's an issue, something's going on? Well, if we break out to the upside, so if we breach this 28,829, that's a signal that the market should scale higher, have a new impulse higher. And if we can't do that, and instead we fail back down below this price point, that's what's called a reversal, an exhaustive reversal. Market gets bid, sucks people in, it's a false breakout. Comes back down, it's a sell. So the expectation is we're either going to make a play for the midpoint of this critical range, or we're going to fail and the thing's going to revert and we're going to have a complete corrective trade down to the sentiment. So the other part of a hedge strategy, and this is the optimal hedge strategy, is that we get a shift in momentum below the directional. Because what that's telling us that there's an issue with the positive momentum. We're no longer performing to the expectation of the state. Because you can look at each one of these price points as literally a staircase. So as long as you're climbing the staircase, everything's fine. As soon as you break that structure, there's a problem. So let's take a look at this chart to get a little better clarity to what that is. And before I even put that up there, let me show you something else that is, a good thing to do on your own, without our work, is to, identify the identifying the previous period time frames highs and lows and the close and midpoint. So what I've identified here is, this is something always to keep in, this is what we're talking about, fact-based trading, fact-based solutions. These are the facts. Now, one of the issues with crypto is that there is no one centralized exchange. You've got a lot of decentralized exchanges, different volumes. You've got OTC trading as well. So what's the real price of Bitcoin? What's the real price of any of these tokens? That is a bit of an issue, but so I'm keying off of Binance. Right now that's got the Binance Perp has got the most liquidity. So even if you're trading on Kraken or Coinbase or wherever you're trading, it does, it's good to be aware of the structures of other exchanges. If you're trading, perpetual is going to be different than spot, but structurally, you need to, pick something, and you should be aware of whatever exchange that you're trading on. So, just some simple, again, we're looking, to standardize your method. If the market's trading above the previous day's high, that's positive. If it's trading below the previous day's low, it's negative. If you're short and the market's above the previous day's high, there's an issue. If the market's trading above the previous day's close, it's positive. Below it, it's negative. I like to use the midpoint. You can think of the previous day's midpoint as yesterday's VWAP. I like to use the current VWAP as well. Those are all great factual benchmarks to incorporate into your trading, to get a sense of understanding of what the market's telling you it wants to do. And just based on this previous period structure, we had a lot of good insight. The market opens up 12 a.m. UTC, that's 7 p.m. local time for me in Chicago. We're right, we open up, that's our settlement. It's quote settlement. There's really no settlement in crypto, but that's the closing, the mark closing for crypto. And the market stabilizes above the midpoint. This is a natural momentum level within the previous period's high and low. If you're above the midpoint, the market is going to look to test the previous session high. If you're below the midpoint, it's going to look to test the previous session low. Simple as that. You keep everything real simple, but this is providing you this kind of benchmark structure. Then I like to I look at crypto in 4-hour segments, and the first 4-hour segment is what I call an opening phase. And the market breaks out of the opening phase range, and then and above the previous day's high, and we get this volatility spike. Market pulls back, should stabilize, does, and it should start to build positive momentum. With the playbook, we know that we're in a bull trend. This thing should start trending higher, and it makes sense. Above the previous day's high, it should trend higher. And then it doesn't, and it stops. Okay, maybe it's just consolidating to go higher. I always like to see the market perform perfectly. So if the market's not performing perfectly, then there's a problem. And so if I have a market that's starting to build positive structure here, then we get this acceleration. This thing should just go. This emotion should stick with the market, and we should just start to scale higher. And so when we start to see this kind of action, there's an issue, and then here we have clarity. And we're always looking for clarity. And here the market's telling us that, hey, we're below the previous day's high now. We broke out above it, now we're below it. This is, but we're talking about that reversal. We'll throw on the market structure in a second. But in terminology, when you're talking about structure in the market, this is price structure. So, the price action, the market making a peak here and starting to make lower highs, lower lows, and you're building this negative price structure. This is time frame structure. So when we're defining the high and the low of the previous period time frame, so this could be the day, it can be the week, it can be the month, the year, quarter. So these structure points work the same. And if you're a fund manager, those are key points because those are your benchmarks. So the money that drives all the markets is clued into absolutely what the previous year's close was, previous quarter. That's their benchmark for their business. So that's why these price points are important. So here we have a situation where, the market tells us right at this point, we have clarity that this market's not performing like a bull trend, and there's a problem. What's the expectation? Expectations, we're going to retest the lows, retest that midpoint, retest the previous day's close, our net change. And then we get this spike down, and then the market can't hold trading above the previous day's close. Again, it's a tell. So your expectation as a trader, one, the market gave us a head fake up here. Two, we broke below the midpoint, which that's just making a new day low, and now we can't go net change positive on the day. It's negative, which sets up this break. And what do we know when the market's trading below the previous day's midpoint? It's going to make a play and challenge the previous day's low. What do we know since we have the playbook? We know the underlying context is bull trend, and the expectation, if the underlying context is going to remain true, then the market should hold above the previous day's low, and it should stabilize in front of it. So again, just looking to standardize what you do, looking to have this benchmark backdrop, so when you get into the moment, and when you're here, you should be not thinking. It should be no mind, and it should just be executing. Because you have to be. You cannot react here. You have to anticipate. And so the structure gives you the opportunity to anticipate. And so here we know the market went above the previous day's high. we do know that the energy and the buying energy of the market is below the market. And we go back to our structure example here. This gives us more clarity. So we knew that, based off the time frame structure, we have our previous day's high is in front of what we call our upside pivot. And we know that this is the real, extension point for this positive trend. And it provides us with a reversal. So we have some other parts of this critical range, and I posted that today in the Discord channel. Let me pull that up. Again, what we're showing you is we're just uncovering the underlying structure of the market. This is this is just fact-based. This is just, these are foundational things. These are market truths. And so with the critical range, we're identifying that key zone, of structure to the upside, and key zone downside pivot structure to the downside. And then you've got a midpoint, not necessarily the symmetrical midpoint all the time, but it's basically a pivotal point between. And again, if you're climbing the staircase, once you get above the midpoint, the market's going to try to climb the staircase up to the top of the range. Down. You can look at these as just, these are your structure points, your levels. But what can happen in the market too is you have different scenarios where, and this was actually, I posted this for Ether, and we'll get to that in a minute. But I just wanted to show, kind of break down these parameters for this critical range. And part of it is what we call our critical range positive extreme and negative extreme. And you can look at these as more validation points. So you got the validation points for rotational moves through the critical range, which is the directional. It needs to be validated above this CR plus to get to here, below here to get to here. And if you're going to get a breakout to the upside, it needs to breach this area to really extend, or fail from this area to really turn the market over. So I'm going to add those points on. Again, it's just identifying that that structure. So when we have this signal here, what it needs to validate above here to be true. This is kind of the stop flush acceleration. And this situation here is classic. And I don't have the data for Bookmap for when this occurred, but no doubt this is going to show the exhaustion in the microstructure, which is what it's all about. So when you're in the microstructure and you're here and you see that exhaustive action happening at an extreme, it becomes really powerful because you have a lot of clarity. Because this thing, one, it already had this huge acceleration move. We broke out to the upside. We know that the real buying energy in the market's way down here. So we already know, before we even start the trading period, that any buy signals up here are not going to be that strong. The market's going to have a hard time really accelerating because the energy is way below the market. It needs to go sideways or a little bit, or it needs to have a correction. And so you have this is what it's all about: understanding the fact foundation that it allows you to have align your expectations with the truth. And the truth is the buying energy is down here, and the truth is if we break out above this point after we've had this significant surge, we call this distance between major levels, average price map distance, APMD. And so if you have, this is basically telling us the segment moves the market's trading in. So this metric let me pull up the playbook again. These metrics are your risk-reward metrics. So basically this helps you in the microstructure too, because this is the movement the market's trading in. So if you get on some momentum in the microstructure, in Bitcoin is moving in basically $407 segment moves, at APMDs. So at the very minimum, you want to take a half segment out. So at the very minimum, you're looking to make $200 on a trade. It's just what the market's giving you. You might as well take it. And then our risk metrics, our alert distance, variance, and maximum stop distance. This has to do with these boundaries. So this is the alert distance here, and the alert distance here, and this is the variance. So the variance is kind of like the slippage area around an inflection point, and the alert distance is really kind of the signal acceptance metric boundary. It also identifies these alert that this price point, this structure point, this upside pivot's been violated. But this is a key factor, what the market's trading in, because this helps to define your risk reward. What's it worth? What are these opportunities worth? And you can see how, here's a this is one segment, 1.5 segments, and you got a full segment move here, half segment, and so you'll see these natural shifts of, here's a half segment move, full segment move, half segment move, half segment move, half segment move. So it just is what it is. This is what these are the segments the market's trading in, and you want to align your risk reward to those facts. And you don't want to take, when you put on a trade, this isn't the price you're getting, right? So you're getting whatever that spread is from your exchange. So that's something to consider. Where are you really entering this market? Anyways, so immediately when you put this thing on, you already have X amount of, against you immediately. And so if you scalp in and out of something, you're taking some money off the table all the time. Taking money out of your account all the time, just getting in and out, right? So you need, extending your duration can help, reduce that, buffer that slippage and the fees that you take to do these transactions. So that all has to be factored into everything that you're doing. And so what these metrics do is they just tell you, hey, this is what the market's paying out. Align your profit objectives with these facts, with these truths. So this is another key thing that we offer with our work. But here, now so it's aligning your expectation. When the market's in, a bull trend that has energy below the market here is going to perform one way, and then a bull trend when the market has its structure in the middle is going to perform completely different. You're going to have a complete different expectation, because in this situation, sentiment's balanced. It's in the middle. And the expectation you're going to have, this is going to be like a power stance, a guitarist power stance. You're going to, this thing's ready to go. And so the energy's, lined up in the middle. So when, having a, let me see another situation here. Let's take a look at futures real quick. I just want to show you a, here's an interesting situation too. So this, what's your expectation here? You're coming into a bull trend context, but sentiment's above the market. So that's in conflict with this underlying state. So the expectation is corrective, and it's corrective below this price point. So that's what it's all about, just aligning your expectations, with the facts. And so for Bitcoin, we know from the start of the session, the context is positive, so we're buying dips, but this thing can break pretty good. And so, more likely, not that the market can't scale from here, and we've seen crypto do that plenty of times, so you have to respect it, but you have to be aware of the tells. And when you come into the trading session, when I posted my update in Discord, what I'm doing is I'm identifying what themes are in play. So I know that the underlying theme is bull trend, and I'm working, and here the market's telling me, from the get-go, it was telling me I'm positive trend. I'm above the midpoint. That's great. Everything's in alignment. This is all telling me the market wants to go higher. Stabilizes above the midpoint. We're winding up here. It's getting ready to make a move. It's either going to break, we're going to have a corrective trade, make it a play for the R level, or it's going to shift positive and we're going to have a play for the upside pivot. So here we get clarity. The market starts trading above the previous day's close. That's positive. Now we get above the directional. We're in line with this optimal theme. We don't have the optimal strategies are the money trades. That's where you put size on, but it doesn't mean it's the only thing you can do, right? So it's basically getting in alignment with this positive momentum theme, and so that's what happened here, where the market breaks out above the metric boundary. This is a positive signal, pulls back to the variance, and made a new move higher lows, and giving opportunity within this alert distance for signal acceptance, and then we get this power pop. One thing about this structure as well is your risk management. So as and this is where, when the market is here, and we'll get to this point in a second here, but when the market's here, you're clued into the order book. What's happening here? What is the I don't have enough history, but what's happening? Who are the aggressors? We're getting liquidity shifts up? Is money coming into the market? What's happening? And this is where you shift to the microstructure when the market is at these structural boundary points, and because as the market's breaking out, is the market performing to expectation? And so here, everything structurally it is. Then you align the microstructure with the macrostructure, and you're going, basically, this is telling you what to look for. What's perfect? And anything that's, if the market is telling you it's breaking out to the upside, then it better be perfect within the microstructure as well. And you better see that. And you better see, and that's what you're searching for. And if you don't see it, that's your tell that there could be an issue. But if you are seeing it, that's your story, you're sticking to it, and you're going for $400. So the market pays you out. Then the market, you have this linear move, and this is always, for risk management, anytime crypto or any market really breaks out of a situation, you need to be super aggressive on locking in your dough. So when the market does this, you're adjusting aggressively. You don't want to give that money back. And when the market comes up is approaching this extreme, and it can't hold it, that's another tell, because that was the flush. And so when the market breaks back down through here, stabilizes, and we get this retest, and it can't base above here, the fact that we did this tells us that this optimal theme is broken. There's a problem. This is a problem because we did this. Because we're always looking, is the market doing this or is the market doing this? And here the market's telling us I'm doing this. I just generated a sell UP reversal. This strategy just executed. And what's the expectation? It's going to come down to the directional. So after we fail here, the market should, but we're looking for a full APMD move. And more times than not, when the sentiment's below the market, that's all we're going to get. And the market will, it's stabilizing here, and then we could see that, and then in this situation, after we test the metric boundary, now the key tell would be, okay, let's get back above the previous day's high point, let's stabilize here, and this bull trend can kind of continue, and it'll be firm, but more sideways. So the expectation is the bull trend's not really going to engage, but what's going to happen is the market's going to go, kind of go into a sideways pattern. But we don't do that. And so so the hedge theme fully engages, and it generates another signal. It gives us this sell DIR breakout signal. So this, just again validating this hedge theme. So the market is telling us that this is not true. So we can't think the market's going to act like a bull trend anymore. It's done for the day on that. We're either going to do this, or we're going to go sideways, and we're going to wait till tomorrow to kind of pick up to make to make a decision. So it's either optimal theme, hedge theme, or non-event theme. And so here we get a negative sell signal on the directional, and it fails here, and it attains a half APMD. Again, you get the action within the figure and the metric boundary and the previous day's midpoint. It's always great when you have alignment with time frame structure and price structure and market structure. So that's what you look for as a trader. You're looking for that alignment, and then you can throw in the daily VWAP with that as well. And so you can see where we have an application here. It's in a Cloud Notes application where you can put our data file in, and it'll plot the structure points on your heat map, so you can be there in the moment. So where are we at now? So we know that the optimal theme is not true. The context of the bull trends, there's a problem with it, because it's not holding higher move highs, higher move lows. It stopped doing that here, and it validated it here on the time frame structure. On the price map, it validated it here. So this is where risk management comes into play. If let's say you had a trend following system, this is a way to reduce your profit give back. But now, so now we're here. The market is in a sell DIR breakout strategy theme, and that's valid below this price point. So as long as we're below the upper metric boundary of the 28,411 directional, that's our story, and we're sticking to it. The market attained that interior level. If it's going to bounce back into a sideways non-event trade, it would more likely just rotate within this area. It couldn't get back above the directional. So when it couldn't do that, what's it doing? Now we're looking at price structure. It's basically holding negative price structure, right? And it's also climbing the stairs down. It's climbing the staircase down. So then here it fails and breaks market structure. So this validates this weakness. And this is crypto and any market, they go right to the stress point. So like when you're and looking for an opportunity here, where's the risk? The risk is here. And the market goes right there to challenge you, to shake out the weak hands. So with the fact focus, and we know we're here, now we're getting into real time, we can start to take a look at the behavior of the market and the microstructure. So as the market is coming in here, I like to see stuff like this where the market has this intensity of trade building up, and then we have a big intensity of trade on a move above the directional here. And this is this spike here. And it doesn't follow through. And then so I like to see that, emotion there. And if we did get a retest, kind of less intensity. But right now, where are we at? We're at this bottom. We're at the, previous day's midpoint. So now, if we see some aggressive sellers coming in, that's in alignment with the underlying context of the state, right? So we know that the bull trend's not going to engage, so these buy signals are really more of a signal to go nowhere. Yeah, it's positive. We're breaking the structure, potentially breaking the structure of the sell DIR breakout strategy, but we also know that the market needs to get above, basically 28,470. So we know that until the market's trading back above here, and we can see where that, we had some, some sellers up here, some liquidity, and this is also nice when you get the, the order book starts to align with structure. It gives us confidence. because we know this is a wall, it's not a wall, but it's basically, this is the validation point. And if we did validate above here, what are we validating? We're validating that this is no longer true, right? The market's either going to perform optimally to the expectation of the state, or it's going to, it doesn't. Okay, it's not doing that. Now I need to focus on this. Is it either, it's the market's just telling us we're going sideways, or we're going to be in a hedge theme? Well, the market told us we're in a hedge theme. So as long as this market is holding negative structure now and holding here, that's your story and you're sticking to it, and that's what it's doing. If this breaks structure, that tells us that this isn't true and this isn't true, and we're going to have one of those terrible linear sideways days. And it's best to just stop trading or sell premium, especially if it's early in the trading session and you get 2 breaks in structure. So as it is here, if we start to get, we start to see, let's say, some liquidity build up and shift down, we start to see some bigger sellers happening, especially as if we start trading below this this 28,340 area and we get some big red dots. Those dots are going to be different. So if all of a sudden we had someone come and just take out this liquidity here, this may have some potential. We do have the VWAP here, and especially that would be another good validation, right? So that would be a validation that, hey, we get below the VWAP, we have some aggressive sellers starting to come in here. Any aggressive selling that starts to come in this area, all the way up to really 28,400 right now, because our figure is 411. It shouldn't trade back above here. And this is a good validation trigger that this thing could start rotating back down. And if it does, what could we see? Well, we could see a play for 28,000. And that's one APMD. We had a half APMD. That would be a full APMD to the downside. What else would it be? Well, it's also going to be the previous day's low point. If you're doing your technical analysis and you want to do a projection, you could take this high to this low and we could swing it down. So I don't really like to talk about technical analysis too much because too many people get sucked into it, and it's such a subjective study, and so it can be very deceiving. But it can be a good tool to use for confluence. So we get, we have, what was the expectation that we talked about from the get-go? Again, it's just, having the truth. So the truth is that energy is below the market. And we talked about, it's more like, if the market was breaking here, we're not going to step in front of it here. We're going to let the market try to make a play for the real liquidity, because the market likes to search out liquidity. And then if we can't hold it, then we're going to look for this exhaustive reversal to kind of get back on the positive momentum. And we have, just as we have on the upside, we have the critical range extreme where the market topped out. We have this number on the downside too at 27,810, which is here, which is basically a swing from here, which comes into alignment here. So, as the market's telling us this week we're in a hedge theme. That's our story. We're sticking to it. We're looking here in the order book for. We do have some liquidity here that we'd like to see the market just grab all this, get everything excited, and then But basically, our plan is, as long as we're above 28,411, we're looking for excuses. We're looking for the order book to give us opportunities to get short. We know where our risk is at, even if we're trading with size here and we're dancing around with that size, we know when we need to start dancing out of it. But we also know if the market does start to roll over, what's the opportunity? And so here we do have some confluence coming in here at the CRX minus, and a lot of times the market likes to make symmetrical trades, and so the fact that they topped out here, maybe they're going to top out, at the bottom out at the CRX minus. Any questions? I don't have a lot of time, but I can keep going and go into Ether and show, basically show the whole method there. The power of this is just having that foundation. So, and again, if you have a shorter term style, mine's a little more longer term. I like to, I'm looking at not only the daily playbook, but I'm looking at the higher time frames, weekly and monthly as well. But if you have a short term strategy, you're using the microstructure, and that's your primary strategy, you need to have some bigger structure. So you need to understand what the context of the state is. You need to understand what the structure of that state is. And even if you are, just incorporating time frame structure into your methodology and having this awareness, and just having this awareness with the VWAP, that's definitely a step in the right direction. You need those statistical benchmarks. We take it to another level and we make it easier. We're your partner in making money. We're here to support you in your trading. If you make money, we make money. And the playbook and the price map structure, this is a weapon. Everything's standardized. If you're going from, we're looking at Bitcoin, okay, let's look at, we want to look at Ether. What's the state? Market's in a bear trend. What's bear trend? It's the opposite of the bull trend. Lower move lows, lower move highs. What's the structure of Ether? Well, it's a little different. We've got a trending market that's got the R level at the sentiment bias. That's interesting. Ether's trading in $25 segments. Our half AP is $12. Our alert distant risk is $3.50. So, if we're aligning for a half APMD, we're risking alert. We can risk 2 alert distances for a full APMD move. What are the strategy themes? What's in play for Ether? So this is something that I posted in the Discord channel, talking about the CR rotational trades. So here, before we get into that, and we just go through this quickly, just to see the strength of this stuff. So previous day's high, previous day's low, the previous day's close. We got our midpoint. What's happening with the market? It starts the period. It's above the previous day's close. That's positive. What's the expectation? Oh, we're going to, at this point, we're going to make a play for the midpoint, and at the midpoint, it's going to make a decision if it wants to go make a play for the previous day's high. Simple as that. So the market starts to do that, and then it can't do it. Falls back in, but can't get below the previous day's close, and gives it another go, and it can't do it. So this is just telling us that the market's having some issues, but what do we know for a fact? Fact is, it's not performing like a bear trend. That's what we know. So what do we know there? It's probably going sideways. or we're going to have some type of corrective move. So now let's put sentiment bias on there. All right. Well, sentiment bias is it's a balanced sentiment, and the market starts out above, holds the metric here. Here you got to pull back to the metric. But what all the market's telling us is that we're in a corrective part of a bull trend, a bear trend, and the market is having a hard time accelerating into a hedge theme. This signal told us that this is no longer true, and now we're either in this theme or we're going to have a non-event. And when we put the critical range on here, and we put our minor levels on here, this gives us, basically this is telling us that, okay, maybe we're just going sideways today. And here, the market took a while to tell us that, until here, because up until that point we still had this positive momentum that this thing was working and it was trying to work this hedge theme. But as you get into the work, and the reason I posted that in the channel is that when the market does stuff like this is it's a tell that we might have this sideways trade. We might have a rotational trade, and typically the market will rotate. And if we see Bitcoin roll over here in the afternoon, we could see Ether dip down here to this 1557 level in this rotational CR trade. Because we're not doing this, and if we break structure here, we're not doing this. So it's more likely we're going sideways, not event. And again, once you understand these structures, each of the structures, meaning where sentiment is, because just like the positive trend, you're going to have markets that are in a neutral, or just that's a neutral one, but here's a bear trend at the directional. Here's a bear trend, a market that's in a bear trend with sentiment above the market, so it's in alignment with the bear trend. And you start to learn these different structures. When the sentiment's way above, outside the critical range, when sentiment's at one of the critical range parameters, when sentiment's balanced, but they're all bear trends. Those are just different nuances, and each of those nuances has different expectations. And so then when you know what the expectations are, and you have that as your underlying context, your foundation, now when you're in the microstructure, you know the value of opportunities, the value of signals, and that's what it's all about. So welcome everyone to come to our website, dharmacapital.trade. There's more information on our tools there. And as I showed you, you can take a 2-week trial, and you can integrate with the Bookmap application. You'll put the structure right into your heat map. But it's important, and then you'll have the playbook, which will give you your context for the period. You'll know what the sentiment is. You'll know your risk and reward metrics, and those are just the truths. So you have that as your foundation, and that's going to help you optimize and standardize what you do. It's going to give you that clarity and help you get into the sync. Because when the markets perform to the expectation, That's when you can really engage and get into that flow in the moment in the microstructure. Any questions? You can email me directly at js@dharmacapital.trade. And I look forward to seeing you guys next week. And good trading. Cheers.